Very well, very well. Welcome, everyone. We are about to start a new session of our FX Street Tokyo room. Welcome, everyone. Let me open the chat and we start. Give me just 1 minute here, and I'll have to hope you had a great weekend. My weekend was relaxing after maybe a few months. Kidding, but almost true though. There are a lot of things going on since the beginning of the year. Really exciting year. All right, so welcome everyone. We have Roland and we have, I don't know if SI. So it's gonna be very intimate this evening. So welcome everyone. So we're going to review the markets anyway, and I only see Roland, but others will join shortly. And this session is anyway recorded, so more traders will probably review it. So. All right, so this is the Tokyo Open Live Room. This is a daily show. We changed the time. It's going to be now on 7 p.m. to 7:45 p.m. This allows also serious traders in Europe to watch and get prepared for the coming week. It's a daily show that features real trading with me, Giuseppe Basile, the FibStalker, at the very heart, excuse me, of the Asian session. And as you know, I consider and take risk very, very seriously. This is a business, and what I like to say is that managing risk is trader's job number one. If you learn to do this alone, this is going to save you thousands, and it's going to save you a year of your life as well. And is going to create the conditions for you to become a successful trader. Trading Forex and its derivatives, futures, options, and CFDs, and other instruments for retail off-exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all of your or more of your initial investment. Leverage can work for you as well as against you, because it magnifies gains as well as losses. Past performance is not necessarily indicative of futures results, and I would suggest you also review the FX Street disclosure on the website. The information, including commentary and trade ideas by this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. Hello, Todd. I provide this information merely for your general information and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated, and FX Street will not be responsible for any losses incurred on investment made by attendees as a result of any information in this webinar. All right, so welcome everyone. If you are watching the recording, hello Peter, hello Todd, welcome in. If you're watching the recording of this video, mind that since today, March 6, 2016, there's a time change in the Daily FX Tokyo Open Live Room. We will, from now on, start at 7 p.m. to 7:45 p.m. This gives us a few advantages and allows also traders in Europe to actually get involved in trading. And I want to jump into the charts here, and let me show the charts to you, not before having told you, and let me tell you, let me say hello here, and I hope you can see me. I don't know if you can see me here. See? All right. So hello, everyone. I hope you had a great weekend, and let's start this great week together with as there are a lot of opportunities around here. And let me just jump into a chart here, particularly the US dollar, sorry, Australian dollar, Japanese yen, Australian dollar, US dollar all correcting, and they're moving lower here. So there is an opportunity for a quick trade into for the Australian dollar, US dollar into 0.7371 or even 0.7350. Okay, so there are 20 pips of difference there. So we should consider this trade seriously. It's happening now. That's when the opportunity is being given here, and the this could be an opportunity Australian dollar US dollar to take the trade here with a stop above ice. So that would be 0.7442. Current price 0.7410. So it's over 30. It's 32 pips. It's not it's not a great reward to risk, but it's still something that we want to consider here. And let me have a look. Let me have a look at this. Let me have a look on Mind with me. One moment here, and I need to set up my charts on CTrader as well. So this is the Australian dollar, US dollar here, and I've been changing a little bit my so again it's 32 pips when you add when you consider expenses. Of course it's a little bit more. Let me see here, and give me just one moment here. Okay, so there is an opportunity here for a trade. Okay, so we should keep that in mind. And I gave you the entry, the stop, and the let me see, for some reason here I'm not seeing this chart here updating properly. Give me just 1 minute here. Mind that also that we changed the data on this market, and let me see here. Okay, I will need to reset this. So, as sorry for the just trying to restart my other platform as well. So there is an opportunity here clearly, and you can see that. I would like to do a little exercise of accountability as well today, and they might be very, very interested. This is for Australian pair. Though the momentum may keep up, yes, not before Todd, not before a correction. And low Joe and low Pantelis. So I see that we are slowly adapting to the new time here. The Australian dollar, US dollar, Japanese yen has been very, very strong, but it now has to correct a little bit. And that's true for the Australian dollar, Japanese yen as well. As you know, okay. So I will need you, good morning everyone, I will need you to bear 1 minute with me here, because I will need to relog into one of the platforms here. So bear with me. As I was saying, this market has been moving higher, but it has to correct before we're going to see the next move higher. So I'm having one problem on one of my platforms here, so bear with me 1 second. As you know, this is real trading, and we want to I want to be ready to take these opportunities. Just don't want to to lose any of them. Here there is an opportunity, Australian dollar US dollar, which keeps moving lower. I have not taken my short position here yet. I'd like to do that possibly, but to do that I need to reopen my account. So without that, I will not be able to take the position. So bear with me 1 second here if I can do this quickly. Otherwise, I'll just let this go and I have to restart my computer here. I cycle it every now and then. So give me 1 second here and I'll be back. That's the worst time for this thing to happen, when you want to take a position, and that's exactly when, everything should be already there. So here we go. Thank you, FX Ambassador. Very appreciated. And this is the demo account. Give me just 1 second here, and sorry for this delay. I hate that. I hate that. I hate to have you waiting while this is happening. And so, as I mentioned, Australian dollar US dollar, there we are on. There is a quick opportunity there. When I called it, was 74.10, 74.8, 74.06, 42. It's almost 40 pips now, so it's not really ideal. Let's say what we can get there, a little position here, maybe a little position short, and that's what I want to do. And my technology is not collaborating today, but don't worry. So mind with me 1 second here, and I'll be back. It's almost there, almost done. Okay, so I'll explain what I'm trying to do here and why it makes sense. Okay, and the spread is still very high here. And mind that now we have the new charts with Oanda in the house. Oanda is in the house, and I'm not saying that that's necessarily something bad, but the data might be different, and we're going to see how different that is going to be, and what difference is going to make. It might make a difference, and we will see what kind of difference that might make. Just want to change this, and I'll be back with you. Sorry about that, but this also gives opportunity to others to join in the meantime. All right. So it's not ideal. 38 pips of risk there for this opportunity, moving lower, but let's see what we get here. Okay. All right. So welcome everyone. The room is filling in here. Joe, Greg, Pantelis. Welcome, Pantelis. Mervin. Hi, Mervin. Todd, Roland, Peter, Rufo. Hello everyone, good morning, good day. This market continues lower because it has to go lower. I'm talking about the Australian dollar, US dollar here. Hi Pantelis, bumpy stuff for Australian pairs, though the momentum might keep up. As I was saying, Todd's not before reaction lower. Algos now are not willing to keep pushing this price higher at this stage until until we get a retrace. I showed you the levels we are looking at, 40, 70, 74.04 here. I think we have to do 73.71, and not even a fairish trade there, but that would be the first level I would consider. Okay, this market can go lower into 73.51, and that should be the end of it, the end of this move lower. Now, as I was mentioning before, there is new business in the house. There is Oanda that since basically this weekend has taken over on TradeStation, a Forex client. And so the data we're going to see here, as I'm using TradeStation for charting, it's the it's now Oanda data. Okay, is that something good or bad? I don't know. We know that Oanda is a market maker as compared to other Forex brokerage like FXCM, just to mention one, and I'm mentioning them randomly, or Pepperstone, which I use. So that is going to impact the quality of data. How deeply, I don't know. If I look at data, it seems a little bit more spiky, which I don't know if in the short, medium, or even long term could have an impact. So I'll be in evaluation mode in the coming days and weeks, and I will now have the series up price with you, Giuseppe. Don't know if it's good or not either. I think it's good. It's good always to to share, to have the same price. So anything that we look at, we look at this exactly the same thing. And generally, it's a good thing, Pantelis, also going forward, as you know very well. So so as I mentioned again, so let me just complete on the Australian dollar, US dollar, and the Australian dollar, Japanese yen, and then we come back and look at what could happen in the euro dollar as well going forward this week. So as I mentioned, potential correction of this market lower. If this market actually continues higher, eventually it has to correct. Okay, and the Australian dollar, Japanese yen, same situation. I have only one level for this market. It's the 83.90. It's 84.20, so it's only 30 pips of correction. These markets are looking higher, they're not looking lower. So any short trade, it's a risky trade. Okay, so know where you have to stop. If you plan to trade this market short, you are trading against the path of least resistance. So we see slowly Australian dollar, US dollar, and Australian dollar, Japanese yen moving lower. That will keep moving, slowly into that 0.7371. So I'm going to put my my target right there. That's the level where I'm going to put my target for the Australian dollar, US dollar trade. I'm not going to look for anything more than that. 73.71. Easy. I mean, there is no business in trying to to make more in this little trade here. Just a little trade. So Use dollar, euro dollar, sorry, euro dollar here. Last week I mentioned a level. Price went very, very close to the level, but did not trade it. And that level was the 1050. The market went to 1042. Now, if this market wants to aggressively move lower, we can consider that level traded, but I will be more conservative here. As always, I am. Okay, so I will wait for. And it's not impossible. It's not impossible to get a rally into that level trading clearly, and then seeing a reaction from that level. Okay, so again, welcome Joe, Greg, FX Ambassador. We have Mervin, Todd, Roland, Peter, Rufo. Someone else is joining here, and I want to thank Mauricio and Daisy for setting up the show in the new to support the new hour here. She's going to be from 7 to 7:45. Okay. I wanted to do a little exercise in accountability today because, as I mentioned, it doesn't make sense to do this analysis and try to identify this level in advance if then or even think about doing a room where we share the analysis and then we're not accountable for them. So let me very quickly here share, and I want to compare the review that I do every day, and I invite you to. I don't know how many of you give me a yes if you typically read also the post I do every day, just so to make sense if it can be useful or not. As you know, if you go on the page, if you go on my page, you'll find a number of articles there every day after the trading room. I actually create a little article, and I use that for a number of reasons. To provide something that can be something that is a recap for the day, but also something that can be used to decide whether you want to watch the full video, full recording, or watch only the recap. And also to keep, I want to keep some clear targets and numbers there. So let me do this little example and a little exercise in accountability here. And what we're going to do, we're going to read briefly, look at the latest. Let me close this. I have too many things open here. Close this as well. So let's look at the latest video here very, very quickly. Okay, I see yes. Can I get the link? I'll. This is the link of the last one. If you go to FX Twitter, look for my name or FibStalker, it brings you to the page, and then every day there are these articles. So this is the latest article, and let me just share this, and let's review this very, very quickly together. Okay, and we will go from the article back to the charts, and we do a little bit of comparison there. I just need to bring this article out, otherwise you won't be able to see it. Okay, so this is the article. The title was Euro-Dollar Correction Higher Could Be Capped at 110.50. Okay, so we moved to, as I showed before, 110.42 was the high. So we are only 8 pips below that level. Okay, just 8 pips below that level. And the reason why the move happened is because, of course, there was participation around that area, as I mentioned, well in advance. Then next we said New Zealand dollar, US dollar, confirmed once again the 80-20 rule, and there was the target of 65.50, and now price is very close to that first target of 300 pips at 68.50. So let's go back to the charts and let's see what the chart is telling us in relation to that market. So we do a little bit of a accountability exercise here. And the New Zealand dollar, we have it here. And the market did not make it into that first target yet, but I would say that it's moving towards that level, and I believe you're going to see that level at the beginning of the week, maybe even tomorrow or on Tuesday. Okay, so there are no reasons now to actually exit this trade now, even though you're seeing some weakness here. And there are a number of levels that we can look at here, and I believe algorithms are going to attach themselves to this level. So very, very similar to what is happening to Australian dollar, US dollar, yeah, that link is broken for some reason. So let's see. Let's repost this. Here is the link. Let's try again this one. No, I mean, the link itself is broken, so you have to go through my page for some reason. And the way you can get to my page is, I can give you the link. You have to go to my page and then click on latest. For some reason, that link directly, it's so look at my latest, the latest link, the one that the last one that you see there, and then click on the first article that you see latest under the latest tab. Okay, so should be able now to see that. So there is no reason to exit these markets now, and as you can see, the first target of the next measure move lines up with that 68.50, and I believe you're going to see that level eventually. Some people will see previous size resistance here. That's not the way I look at the market. Sometimes the FibStalker levels lines up with those levels. That is very strange. The second one does not give any problems to me. The second one does not give any problems to me. The last link, I have the last one. You have to use this link here. Let me post it again. Okay, so New Zealand dollar, US dollar, same situation, and we have to wait here. I think we have a very, very good possibility to actually reach that target there. Okay, so let me go back to the article as well. I've been doing some tests there. Should be able now to see that. No, now I'm having the same problem as well. So this is funny. Okay, so let me see. Yeah, I cannot see the page now for some reason. So I'm having the same problem as well. That's unfortunate, and we will clarify the reason why that's happening. But anyway, it is what it is. Let me try to open the page and look for and search for my name on top right, Giuseppe Basile. Try to put that, and then that should give you the author page, and then from that, no, I'm not able to open it any longer. So let me open the original text I had in for that review, and probably maybe the website is being updated, and that's the reason why you could see something like that. That's not common anyway, so not a big deal. So the other points we had is that the Australian dollar, US dollar was strongly continued higher and hit the first target at 73.20. So let's look at that. 73.20. By the way, this market is continuing lower, of course. 74 now. 74. We started from 74.06. So it is very, very slow, but it's gaining a few pips there. I have 32 pips to go. Sorry, I have 27 pips to go to reach target, and maybe we will see this target. I don't know if we'll see this guy in the next 15 minutes, but if this market keeps moving quickly, we could see that. So, but what most importantly in this market, what we said last week, and for accountability here, Australian dollar US dollar strongly continued higher into the first target, 73.20, and into the second target as well. And in fact, you will remember that we traced this measure move participation here, 73.20 here, 73.20 was this first target that you see here. And I also mentioned that this market could continue into the second target, 74.30. Okay, the market actually reversed a little bit higher, 74.42 here. Okay, that's where it reversed. And there is a reason for that, because there is algorithms and this specific instance were taking profits, and we know in advance when they take profits. And similarly, Australian dollar, Japanese yen has also shown strength, broke out above the consolidation area with a first target at 83.50. So let's review that first target at 83, excuse me, 83.50. Okay, so that first target 83.50. Let me remove a little bit of lines here, because that could be, was this level here, 83.50. And I also say this market could continue into 85.40, which is the second target here. Right, we didn't get there. But I also mentioned that if it retraces into 82.50, that's a long into 85.40. Okay, now I don't believe this market is going to retrace all the way into 83.50. It's too extended for that. I don't think we're going to see this level. Very, very improbable. It's much more probable that we're going to see an extension here. Okay, trading. And so I believe this market has an opportunity to continue higher here if we see a reversal around the 370 here. So keep in mind these numbers. These are very important, and we could see a retrace and a continuation higher into 85.50 here. From 83.60, 70 to 85.50, it's 180 pips. It's not too bad. It's not something you want to just set aside. Yeah, I did all the possible ways. It's not working. That link, it's not working at this very moment. So probably there is some updating going on. Todd saying, do you feel it will hit target, then move higher, or continue lower? If we're talking about Australian dollar, Japanese yen that has not hit that second target, I think that is going to correct here where I showed this 83.70, and then it's going to reverse. However, what I believe about the market is not really important. Mr. Market is going to do whatever he wants. What I believe is in looking at these levels and then using the timing. So if you're talking about Australian dollar, US dollar, Todd, then let's look at that. So do you feel it will hit target, then move higher? It has still hit target already, so it's moving lower at the moment. So it's going to set up. This market is going to set up at the next level, and yes, continue higher. Yes, there are no reason why this market should not continue higher. Look at also the pace, the strength of this market has changed and has increased. The strength, the interest with which traders in this market are actually pushing this market higher has increased when you compare to the previous move higher. It took more than 1 month and a half here for this move, and then the same move happened in 4 days. Okay, so there's no reason to believe, Todd, that the Australian dollar, US dollar cannot continue higher. Indeed, it will continue higher. It's just a matter of where this market is going to stop. There's no reason now for this market to stop here. There's no one who's pushing this market lower. And if there is no one who's pushing this market lower, the algorithms will keep popping it up, especially after the commitment that we saw last week. So I don't see this market reversing like a rock here. It would be very surprising to me. Of course, everything can happen in the market. I'm just saying that to me, this behavior doesn't seem the most probable one at this moment. Okay. Consider there could be buying of yen for year-end 10. I don't make that consideration, FX Ambassador, as you know, because if we have to make all these considerations, we'll never trade. So this is what I see in this market. This is 73.70. Is the level I'm interested in, the area I'm interested in monitoring. If the market reverses there or gives us a FibStalker FibStalking timing entry there, I'm gonna get long, and I'll be happy to ride this market into 75.34. Yeah. Yes, Todd. I mean, it's good always to have confirmation, and when people see the same thing, this is very. There is nothing magic in this observation. I mean, it's just very, very strong. I don't see reversing. If there was a short area above price, I would justify a reversal, a V reversal, but I don't see a V reversal here at all. And whenever there is a trend, we always want to point to a continuation of the trend rather than an inversion of the trend, and a continuation of the trend. As they say, the trend is your friend until it ends, or as someone says, until it bends. So the trend is your friend until it bends. And I believe there was Ed Seikoya, Seikota, who said, the trend is your friend until it bends. And to me, it has not bended yet. So we'll stick to it as it is now. And lastly, I just wanted to complete that little exercise we are doing. Finally, we reviewed the SP 500, 1 or 2 sessions below its 2003 target. And again, when we review that market, you know that on Friday, that market reached the first target, and incredibly, it started a retrace, incredibly, right after testing that 2003. Oh, how random behavior this market is having, okay? It's very random behavior. So if you don't believe that algorithms are in the market and algorithms control, that's the right word to use. It's control, especially on the larger time frames. This is the proof. If you still need proofs that whenever algorithms reach levels they're interested in selling, they will, and the market will reverse, no matter which are your beliefs, and no matter the Japanese yen or the carry trade is doing. they will sell. If they sell, as they are 80% plus of the futures market, you shouldn't anticipate market moving higher. Okay, so we will look at this market to test this week the 1975, and this will decide the continuation higher or not of this market. Okay, so I think it was a very good and important exercise in accountability here, and I think it's always important. It's unfortunate that we were not able to actually see that article directly from my sheet, but that article is there, and you can have a look at it. Okay, so it's 7:42 here, so I'm going to start a recap right now. So we talked about the Australian dollar, US dollar, and we mentioned the fact that this market has reached the second target, and it's now possibly going to correct into the next area of potential resistance, support, of course, for a continuation higher. And even if you're seeing a rally at the moment on the 1 minute, the rally does not scare me at all. Okay, this kind of rally here, they don't scare me at all. So this market can do whatever it wants. Eventually, I believe you're going to see this market retesting this 73.70 for a continuation higher. Similar situation for the Australian dollar, Japanese yen. This market is very extended here, and before a continuation, this market might correct as well. However, this market has all the rights to continue higher from here into 85.40 as well, which is one of the targets that we indicated last week. We also reviewed the the euro dollar here. We mentioned last week the 10.50 level. The market came 8 pips from the level. Is it still possible that we're going to see a retest of that level early this week? If that happens, that's a gift, because this market now has the potential to continue lower into 107.20 and then eventually revisiting the lows here. If that happens, this would push just US dollar, Japanese yen higher into possibly that 116.40 or even 118.40, which on the other hand would be another gift from these markets. And we did a little exercise in accountability. We looked at the I agree with you, FX Ambassador, when before I was showing that 1 minute chart on the Australian dollar, US dollar. You say here noise on the lower time frame, very well said. That's exactly what it is, so I'm not absolutely worried about that. We're doing our analysis on the daily time frame, so there is a gap there that could be filled. Again, that's not a big deal. Our stops are above, and I'm not worried at the moment. This market gapped down for a reason. And finally, we reviewed very quickly the SP 500. We showed how this market magically has reached that 2003 level that we have been mentioning in the last week and a half here. And as soon as the market touched the level, went a little bit above it, and then bam, the sellers came in, and they are now still selling this market, and they're going to bring this market down into the next level. And according to my study, the next level is going to be 1975 here, 1975.75. All right, so this is it for today. It's going to be an interesting week. There are going to be, I believe, a few opportunities for continuation higher in some of the markets that we follow. I didn't mention the Euro-Canadian dollar here. That also traded a level that we mentioned last week. So this could continue lower into that 142.96. If you are short this market, you should stay short. and try to bring this market into 142.96. Okay, so this is it for today. I'm going to see you tomorrow at 7 p.m. and have a great week. It's going to be a lot to trade and to see this week. So join me tomorrow, and we're going to review these markets together, and we're going to uncover opportunity for this week. So I wish you a great trading and non-trading week, and I'll see you tomorrow here at FS Street, at the FS Street Tokyo room, Tokyo Open room at 7 p.m. Thank you very much, and have a great evening. Bye-bye now.